Bitcoin, and ETH have lately dropped below their respective historical bull market highs of 20,000 and 1,400. Many are questioning if the crypto bear market has reached its bottom and how much lower we can go before the crypto market begins to stabilize. Today, I plan to address these issues by looking at a variety of indicators, such as historical crypto lows, stock market correlations, on-chain analytics, and even institutional prices. I'll start by emphasizing that practically everything in this video is speculative, because nobody, not even myself, knows what the future holds. All I can do is make educated guesses based on the best available facts. I have to deliver information that might alter at any time. Now, November was when Federal Reserve Chairman Jerome Powell announced the Fed would begin raising interest rates in response to rising inflation. Since then, the practical result has been that trillions of dollars that have been poured into the economy, primarily in the form of debt, have been progressively drained out. This is because people and organizations are hurrying to pay off their debts before interest rates rise, selling a large number of assets in the process. This historic reversal of liquidity has triggered the current crypto bear market, and it is slowly but steadily dragging most equities into bear market territory as well, with the housing industry following suit. Given that the Fed will eventually raise interest rates to combat inflation, assets will likely continue to fall as long as inflation is high, simply because it implies that the Fed will continue to raise interest rates in reaction to the economy sucking even more money out of it. Prior stock market cycles, as well as previous crypto market cycles, all imply that the crypto bear market might last till the end of this year. However, if any of the variables leading to this inflation on the supply side change, such as the war in Ukraine and the pandemic, we may see a quick rebound across the board. This raises the question of where the bottom of the crypto bear market will be and how low cryptocurrency may fall. So, the search for the bottom of the crypto bear market begins with Bitcoin. This is due to Bitcoin's dominance in the crypto industry. Whatever Bitcoin does, all coins will do as well, but with greater volatility. As a result, a 10% increase in the price of Bitcoin generally leads in a 15% to 20% increase or more in the price of most altcoins. The same volatility applies logically in reverse. If the price of Bitcoin falls by 10%, most altcoins will fall by 15 to 20% or more. This is significant since I cannot possibly cover every single crypto individually. So, Bitcoin peaked at $32 in June 2011 and plummeted to $2 in November 2011. This translates to a price loss of more than 90% from high to low, and Bitcoin's bear market bottom took nearly 5 months to get to that price. During the second crypto market cycle, Bitcoin reached a peak of $1,100 in November 2013 and plummeted all the way to $180 in January 2015. This translates to a more than 80% decrease in price from high to low, and Bitcoin took more than a year to reach its bear market bottom. Bitcoin reached a peak of 20,000 in December 2017 before falling all the way to 3,200 in December 2018. This amounts to a more than 80% decline in price from high to low, and Bitcoin took roughly a year to reach its bear market bottom. Based on Bitcoin's admittedly limited historical data, Bitcoin reached a high of more than $69,000 in November 2021 during the most recent crypto market cycle. A decline of 80% implies that Bitcoin might go as low as 10K to 14K, putting the crypto into a bear market. Clearly, the bottom might come later this year or early next year. It's hard to predict when Bitcoin will bottom, but it will almost certainly be sparked by something unexpected that is objectively awful for the crypto market. According to my understanding, the first bear market bottom for Bitcoin was triggered by the hack of the now-defunct Mt. Gox crypto exchange shortly after Bitcoin's inception. Some sources claim that this is the first bear market. The low price of Bitcoin was caused by crypto miners selling their Bitcoin as it became less profitable to mine. The second bear market bottom for Bitcoin was likely sparked by the breach of the Bitstamp crypto exchange, which occurred just a few weeks before the low. According to the narrative, Bitcoin holders were alarmed by the prospect of another Mt. Gox. A number of reasons led to Bitcoin's third bear market bottom. including huge banks like Goldman Sachs and JP Morgan entering crypto and the rising inflation. I believe that the next bear market low for Bitcoin will be caused by a similar combination of factors, such as institutions and even publicly traded companies like Tesla selling off some of their Bitcoin, the SEC rejecting all Bitcoin spot ETF applications once again, and a slew of crypto crackdowns. What's more, Bitcoin's correlation with the stock market appears to suggest that Bitcoin's low for this bear market might be around the 10 to 14K region. Also, another important thing to note is that the correlation between Bitcoin and the Nasdaq 100 is about 0.82. Note that 1 is a perfect correlation, although most altcoins are 50 to 100 times more volatile than Bitcoin. Also, we need to remember that Bitcoin is 50 to 100% more volatile than Bitcoin. Bitcoin is down about 60 points since the beginning of the year, while the Nasdaq 100 is down about 30 points. Also, the Nasdaq 100 has traditionally dropped at the same time as Bitcoin, with the Nasdaq 100's bear market lows in December 2018 closely aligning with Bitcoin's bear market lows. Given that institutions were extensively involved in crypto during the last crypto market cycle, we can assume that institutional manipulation of the crypto markets began around late 2017. As you can see, the average decline in the Nasdaq 100 from top to bottom varies quite a little, with the dot-com bubble burst in the early 2000s causing the index to plummet by more than 75 points. Some might say that we're in the same dot-com bubble scenario today, but I believe we're more likely to be somewhere in the center. As a result, the Nasdaq 100 might decline again. The Nasdaq 100 will have fallen another 20 to 25% from its highs, equivalent to a 40 to 50% collapse in Bitcoin. Its bear market bottom is truly unknown, as the period between its past highs and lows fluctuates even more than its average decrease from top to bottom. As best as I can tell, it will take less than a year, which is consistent with Bitcoin's time frame. Aside from the stock market link, other indicators appear to corroborate the assumption that Bitcoin's low for the current bear market might be between 10 and 14K. The first set of signs is related to Bitcoin mining. Now, the first indication to examine in Bitcoin mining is the total hash rate. Hash rate may be thought of as a measure of how much computer power has been dedicated to the Bitcoin blockchain. As you can see, Bitcoin's overall hash rate plummeted around the end of 2018 and actually bottomed out around the same time. The bear market bottom for Bitcoin in that crypto market cycle had been reached. This makes sense because Bitcoin miners often quit mining when the price of Bitcoin falls to the point where it is no longer profitable. As you can see, the entire hash rate of Bitcoin has completely fallen. When China outlawed Bitcoin mining last year, I would argue that this was really an outlier, given that Bitcoin's overall hash rate swiftly rebounded, and it's evident that the rising trend persisted. According to more detailed data from Glassnode's hash rate indicator, Bitcoin's total hash rate declined by roughly 50% from top to bottom during the first crypto market cycle, and by around 50% from top to bottom during the third crypto market cycle. Surprisingly, Bitcoin's overall hash rate increased during the second crypto market cycle, which I believe was driven by the advent of specialized crypto mining equipment known as ASICs in 2012, which made mining viable even at much lower Bitcoin values. In any event, the admittedly limited data on Bitcoin's total hash rate implies that we may, or rather should, see a 40% decline from current highs of over 200 terahashes per second, which would be around 120 terahashes per second. When it occurs, it is likely that the Bitcoin bottom has been reached. Also, the average cost of mining is presently about $20,000 per Bitcoin, suggesting that Bitcoin's overall hash rate may soon begin to drop. However, it's plausible, if not likely, that the average cost of mining is somewhat lower, according to Glassnode's modest net position change indication, which indicates that Bitcoin miners haven't been selling much of their Bitcoin. Recently, the miner net position change indicator has shown that we have reached the moment of maximum agony for Bitcoin miners, and I assume that the actual average cost of mining is closer to 14K per Bitcoin than 20K. Since energy prices continue to rise in almost every nation, Bitcoin miners will begin to feel the pinch around these levels sooner or later, and I'm sure many of them are already feeling it.